All right, y'all, back to work. Weekend is behind us. We got some money to make this week. And boy, things are still pretty wild right now in the wake of tariffs last week. And I know things are crazy in the markets right now, but I'll tell you, there are two clues on these charts tonight that are just making it really obvious where the best winning trades are waiting for tomorrow. We're going to cover those clues, and more importantly, how we can use those clues to make some money together tomorrow morning as well. So charts are ready. Enough of the intro. Hope you enjoyed the weekend. Get a busy money-making week ahead of us here. Let's dive right in and make some money on Tuesday morning. S&P SPY is all ready tonight. NASDAQ triple Qs are all ready. I have three very simple but very important clues on these charts in front of us that are telling me where I think the winning trades are waiting for tomorrow. One of those three clues is right here on the hourly time frame. I like to use these hourly charts for an overall directional filter. It's pretty obvious right now. We are very bearish overall here on the S&P and SPY, quite bearish right now, the NASDAQ and the triple Qs. Now, this is pretty obvious, right? Direction is pretty obvious right now. I have two more important clues that will help us time some entries for tomorrow. Before we dive into those though, let's check schedule for tomorrow. There's no major news tomorrow. There really isn't anything much until we get CPI on Thursday, PPI on Friday. So no major news tomorrow, but we know right now that tariff talk, headlines are really moving these markets around. So we'll have our live news feed running tomorrow morning in our trade room. So eyes open tomorrow. Keep your eyes on those headlines. Back to our charts though. I mentioned earlier, we have three total clues. One clue was this overall directional bias on the hourly time frame. Let's now drill down to our faster time frame, our tick charts. Tick charts make pattern recognition and entry timing easier. All the time frames, by the way, upper left-hand corner, and that yellow line right there, in case you're watching for the first time tonight, that is the only indicator I use to find winning trades. That is the 21 EMA. There are two really obvious clues on these tick charts right now that are making it easy to find winning trades for tomorrow. One of those clues are these strong moves back and forth. Strong move down, strong move back up. Now, why would strong moves be important clues? Because anytime we see a strong move in one direction, we expect a pullback and a retest of that level. Anytime we see a strong move down, for example, they tried, but they haven't quite completed that objective, as we call it, up and retest that low. Anytime we see a strong move in one direction like this back and forth, we know these areas are bullseyes. Buyers are going to try to take out that high. Sellers are going to want to take out that low. That's a big clue here. But the most important clue is this range right in the middle. We went up, we rolled lower into what appears to be a bit of a bearish trading range. Now, why would a bearish range be important right now? Well, two reasons. One, ranges act like magnets. And two, they love to rotate back and forth using things like triangles or megaphones, using things like pendulum swings, the amount above, the amount below, the amount below, the amount above. Okay, so that trading range is a bearish range in an overall bear market. So we know in these situations that rotation is more likely now to break down and run lower because of the overall momentum on the higher time frame. So if we understand that we're overall bearish on the hourly time frame, if we know that this range is a magnet right in the middle, and we know that strong move higher is just begging to get retested, I love the idea of some bull traps up here. Now, bull traps come in lots of different shapes and sizes. You know, for example, I would love to run up here right now, really get anywhere in this overhead resistance and try to trap in some buyers. The way I do this is to use that 21 EMA, let those buyers try once, lower low, try twice. Once those buyers try twice, now I know where their stops are. And if you're caught long and you get stopped out of a long trade, what happens? You have to sell your way out. So buyers become sellers when that trade fails. So one of my favorite trades for tomorrow is a bull trap. Run up into these highs, get somewhere up into resistance, trap those bulls chasing after it, and sell right into those stops. Now remember, this is where things get fun. That range is going to want to rotate all the way back down now. So as this thing starts to tumble off that high, don't get lazy right now. Add to your winner. The easiest way to make more money in trading is to add to your winning trades. And to do this, I'm going to use a very simple, in my free trading class, we call these bull traps. They're basically bull trap patterns. I call these add-ons in our trade room. The add-on on this is going to be a shallow pullback that separates off that moving average, like right over there. Look at that pattern right there. We run down, we pull back, we lower low. That lower low right there, lower low, above that high. That's your add-on, right? So that add-on right there is exactly what I want over here. So one of my favorite sequences for trades tomorrow will be go up, trap the buyers in, sell into their stops, and as we run back down, remember the key is you want to get that separation off that moving average, lower low in price, and that add-on from there. I will definitely take some off at the low of that move there, but absolutely leave that runner, especially for that low of day, especially for that pendulum swing all the way down. Now, I do want to talk about there's one simple bear trap pattern I would love to buy back up again if we can get that trade tomorrow. I'm going to cover that bear trap, that reversal pattern. I'm going to cover that one a bit later on in the video. That'll be a bit more advanced. So if you like making money, I would definitely stick around all the way to the end to cover that long side trade a bit later on in the video. But let's talk about one more important thing here. We may not get a bull trap up there, right? We may not run up and get a chance trapping these buyers up there, right? Like over here, what happened over there? A V-top. We went up and came right back down again. If I see a V-top up there, what almost happens is we'll start grinding down back into that range. Now watch closely here. Just draw a trend line off the lows like that, bring it up around the high, and then look left, find some prior swings. That's another version of a bull trap. Now remember, on these ones, you want the first touch up top of that channel, right? Look over here, right? So we go up, we go down, we grind down. Is there any surprise right here, right? Off that low, off that high. I mean, it's no wonder everyone sold off the top of that channel. So that V-top, again, not my favorite, but I don't control the markets, right? That's the game plan there if we V-top off of that high. Now, I have a couple more bull traps I'm going to talk about. Before we do that, though, let's slow down for a couple of seconds because I know most guys and gals, you guys know these patterns already. You're making money with traps and add-ons. You're loving range rotations. But if you're watching for the first time right now, this might be a brand new strategy. Don't you worry, though. I teach this entire system in my free trading classes. In fact, I have a ton of trade examples, bull traps, bear traps, reversal trades, lots of add-on trades. Guys, I want to help you time better entries with this system. So I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly, though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent profits. Guys, the markets are way too good right now not to be banking profits each day. So if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I share in that short video series. The best part is it is completely free for you there. I'm going to also put all the important links you'll need to learn the strategy. I'll put those below the video today in the description. Start first on the free video classes. Again, most folks start making money all on their own all from that free trading class linked up below here tonight. And don't forget, if you're on Twitter or X, they call it these days, I post a ton of charts and videos and mindset stuff on Twitter X. If you're on that platform, give me a follow. Again, all the details you'll need to learn this stuff and hopefully earn a lot more because of it are linked up for you in the description of that YouTube video. Okay, so that's where you want to go if you're watching for the first time right now and you're not getting consistent results and you want to time better entries and make a lot more money. Now, one more thing, and again, I'm going to talk about going lower here in a moment because there are selling opportunities going lower. There are buying opportunities going lower right now. So we're going to cover those in just a few moments though. But first things first though, we've had a lot of wild price action. Sometimes we get that run up. We'll take out that big high. We'll get our buyers once, our buyers twice. We'll trap those buyers in. We'll get a nice, easy winning trade on this. You know, what I do is I take a 1-to-1. So stop to target 1-to-1, move that stop down, remove the risk. I teach this in that free trading class I mentioned earlier here in this video. But you know what though? Sometimes the strength of that breakout is so strong that we simply get another run going higher. Now remember that 60-minute time frame we saw earlier. Very bearish, big move down. This is not going to be a reversal. It will require a lot more than a retest of that high to be a full-blown reversal on the higher time frame. So don't confuse this. This will feel like a reversal, but don't lose sight of that hourly time frame. In my eyes, these are called retest trades, right? So we run up, we pull back, we retest the high, and of course you could easily argue that this is also a retest trade here as well. But every once in a while though, we'll get a retest. It's such a strong move up, it wants to go and retest again. This is another bite at the apple, right? Once I retest this high, remember we're still in a bear market, right? So not a good place to be buying. I want to see buyers though. I'm not going to pick a top on this, right? I want to see buyers once. I want to see buyers twice. Remember, lower low. Always want to be a lower low because again, I want to rope in those buyers so I can use their stop losses to run those stops over. Again, if you're caught long, get stopped out of that long position, you're selling your way out. Now, as it rolls over, again, don't just kick your feet up on the desk. Keep your foot on the gas pedal. Get that lower low in price above that high. And again, that's going to be our add-on going back down into that trading range. That range below us, right? Unless something changes, unless we see a new range up here, which we might, and we'll make adjustments to that tomorrow morning in our trade room. But unless something changes, that range below us right now, that will continue to be a big magnet. So as we go up, it's bull traps. It's bull traps. And again, don't underestimate that retest trade. We see a lot of those. We go up, we pull back, we double up, and back down from there. A lot like this one, right? Go up, double top it, retest it, and back down from there. So keep it in mind here. And again, if things go crazy tomorrow, if we start seeing this thing jump and really start moving, Trump tariffs, a lot of tariff talk right now, we'll have to cross that bridge once we get there. So we'll keep an eye on that tomorrow morning in our trade room. Now, here's a bigger question. How do we sell this as we're going lower, right? And could we buy it down here off that low? Because again, remember that big move down, they want to retest that low. And that's pretty far down right there. So let's talk about that now. How about over on the NASDAQ right now? On the NASDAQ, you can easily see here on the hourly time frame, very bearish. And again, we're not going to trade off an hourly chart. I like to use this as a bit of a directional filter. Now, before I dive into those tick charts and talk about some different trades I'm watching for tomorrow, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in and watching my videos. So thank you so much for the likes, subscribes, sharing this video with other trading buddies of yours. Thank you all. Thank you for all of the ongoing support. Now let's dive in and talk about tick charts here. Again, I think tick charts just make everything easier, right? Compare a tick chart to a 3-minute time chart or a 5-minute chart. You'll see right away tick charts, they They make the patterns a whole lot easier. And you can see right away, the NASDAQ is almost the same exact thing right now. We saw a very strong rundown. And as of right now, they have not retested that low. They came very close, but did not successfully retest. So in my world, that low right there, that is unfinished business, right? Unfinished business. Sellers want to take out that low around 460. The same thing goes going higher, right? That big blast going higher on the rumor that was denied by the White House of that 90-day tariff pause, which apparently was just a rumor and nothing more than that. That strong run higher, though, you know these buyers, they want to take out that high. And again, this is where the 60-minute time frame is really, really valuable because we're not a bull market. We're a bear market. So that's why with that range below us, that's going to be a magnet. So as we go higher, it's those same bull traps, right? We run up, we trap the buyers in, we squeeze stops, and we add to our winners as we rotate. And remember, if there's one type of market type that you want to always leave a runner, it's always a range, right? Because again, it's going to want to rotate other side of that trading range. Now, as we go lower here, right? As we go lower, this is where we've got some more options as we roll. Now, remember, pendulum swings, right? The amount above, the amount below. This may change, right? This may change. Obviously, if it goes a bit higher here and then back down, this will change here. So that pendulum swing is a big deal for me. If we run up and start rolling over here without really getting much of a run going higher, what I look for now is those add-on trades, right? Those add-on trades. Again, it's so valuable when we see that shallow pullback that barely touches the moving average, or my favorites are they barely miss the moving average there. I want to get that lower low in price and start adding in or start selling that, right? That basically that add-on trade, right? In the free trading course, these are technical bull trap patterns, technical trap patterns, right? We go down, we go up, we go down, lower low, above that high. Again, no surprise there. Everyone's looking for a short on that one. So again, want to go up, back down again. But if we happen to start rolling lower here, before I take out that pendulum swing, look for that separation off the moving average, that lower low in price. And as I teach in that free trading class, I want to see that nice strong red candle closing below that moving average, and we know where our targets will be from them. Now, again, don't forget the hourly time frame. We're overall bearish. So now, even though we know that ranges love to rotate, they rotate down, up, using pendulum swings, the odds are much better now because we're overall bearish for basically what becomes a breakout pullback, right? A breakout pullback. So now, imagine now, this area underneath that trading range right now, imagine now we see a nice strong run going lower, lot of good separation, right? Lot of good separation off the moving average, right? So big move down, separating off the moving average. Remember, separation equals strength, right? It separates off the moving average. Once it separates off that moving average now, think about that range now for a breakout pullback. Now, when I think of breakout pullbacks, I always think about a two-legged pullback, right? Which is basically a symmetrical measured move. Ideally, one back around the moving average, two back up. Think about a measured move, right? Ideally, a little bit more than a measured move, right? Think about a 110, 120, 130%, right? On that pullback. Again, the goal will be to combine the underbelly of that trading range. And as always, I'm not going to pick a top on this, right? I'm going to wait for that market now to pull back to the moving average, trap those bulls in, get those two tries here. Remember, bear market, right? Lot of momentum. Ideally, this will be another strong move going lower. That'll be a bullseye now, an objective as we call it for the bears here. I can trap those bulls in, get that bull trap. And remember, you know where the market wants to go if it starts separating off that moving average now. And again, when I say separation, it's that pullback, right? The pullback doesn't pull back to the moving average, or if it does, it barely touches the 21 EMA. The easy way to make more money, guys, is to add to your winners and we're running back down again. Another variation of this you want to keep in mind, again, this is kind of your classical breakout pullback. It's a strong, convincing breakout. It's a two-legged pullback into the underbelly, right? Kind of a breakout pullback off that range. That's kind of your typical, dictionary definition, if there was a price action dictionary of a breakout pullback. Another very common variation of a breakout pullback, though, is basically a pop and grind breakout. We oftentimes see the market will rotate and begin to grind going lower. Very, very important. Anytime we see a market start to grind in one direction, we talked about this late last week. If it starts grinding down like this, very, very strong momentum. Very simple now. Market trend line off the low, bring it up around that high. And as always, I want that first test, right? Get above these. What I want is, ideally, I'd love to combine the underbelly of that range along with the top of that channel. If we are really lucky for tomorrow, we'll have three things here, right? Underbelly of that range, a prior swing high, because those are where the easy winning trades are. We'll see a pop up and a first test off the top of that channel, right? So breakout pullback, pop and grind channel, or we call these pop and grind channels in our trade room. And again, I want that first test. Now, this could be a strong red candle closing firmly below that 21 EMA. It could be a move back above the 21 EMA. Buyers come back in. They try once. They try twice. Love those, right? It's kind of a two-try bull trap. And then remember, the sellers right now are trying to complete these big pendulum swings, right? The retest of that low. Another trick I like to use on these is whenever I see a pop and grind move like this, the pop leg or the breakout leg is always a measuring leg. So once I know how big that pop leg is, and you'll see it, right? It'll pop and then start grinding down like that, right? The pop leg is always the measuring leg. Once I know how big that pop leg is, and I know how big that pullback is, now I can use that now to engineer that final target. In my experience, once I learned that the breakout leg was always the measuring leg of a trading range, it got so much easier to hold on to my winners. We always say, let your winners run, but when I was a newer trader, I didn't know where to let them run to, right? And I kept on missing those final targets. Once you learn that the breakout leg is the measuring leg, that for me personally, and most of my students in the trade room, it makes it easier to be patient to let that trade run, because now you know where the objective is, right? Now you know where the market is trying to go. All right, so those are some breakout pullbacks I'm watching for tomorrow. Now, here's a big question. This is a very good chance with that big move down. When we go back to retest that low, anybody who sells short up here, there's a very good chance they take their profit at that low. So there's a very good chance here we get a significant bounce off of that low. But how do you time the entry on that? It's not easy, right? Because we're so bearish right now, it could easily keep on going lower. There's one entry pattern we look for around these lows. And really, in all reality, it could be that low, it could be that low, it could be any major low around that big low. Again, that big move down is going to want to retest that low. That's a retest trade. We love a retest trade here. The problem is we're so bearish. This is where crown reversal patterns come in handy. So whether or not we get that short off the top or we're short on the way down right now, if I find myself in this area of support down here, this is a horrible spot to be selling, right? Again, I like the idea of a run breakout pullback. I like the idea of selling the bounces right now. What I don't like the idea is chasing after it after such a big move down we saw to finish up the week last week. So as we run lower, I will gladly look for a bear trap down here, but this needs to be a little bit more of a patient, a more specific type of bear trap. I'm going to call these crown reversals. They're definitely two tries, right? They're one try, two try, but the key to picking a bottom in an overall bear market is you have to get underneath these prior swings. All right. So again, still same idea, right? Bears once, higher high, bears twice, but I need to be seeing that move right below that low. I need to be long before we start going higher, right? I do not want to be buying way up here. Why? Because as we go higher now, what's going to happen? We go higher now. Now we run into that breakout pullback and back down again, right? So I don't want to trade this like a typical bear trap where I buy above that high, because in a lot of cases in a bear market like this, I'm buying right into what is basically a bull trap, right? I need to be in the money on that trade. I need to be getting my one-to-one target. I need to be taking profit up in that area, right, on that long trade, not getting in right there, right? And these can be a bit scary, right? They can be a bit scary because you're going against all that momentum. But on these ones, I'll go half size, I'll go quarter size. And like I always say in these videos, remember, the scary trades are the ones that work the best. And you can see right away what's happening right now, right? Buyers are coming in and they're getting in underneath these swings, right? Right here, right? We go down, bears once, bears twice. This is the pattern I'm talking about, right? So we go down, bears once, we go up, bears twice. Again, higher high, get underneath prior swings. Go back to the S&P chart. You'll see for yourself, right? Buyers came in the S&P today. Buyers are going to start buying low with this pattern right there, right? That, again, we call these crown reversals. The only other variation of this would be a V bottom off that low, right? We don't get a chance, trap the bears in back up. It's a V bottom. We start grinding back up again. This range now is trying to rotate back up again, and we can now find that new bull channel off the high, off that low. These are definitely not as desirable, right? Not as desirable at all. I want to buy as low as I possibly can, but I would looking for something like that tomorrow if you don't get the crown reversal off of that low. All right, guys, that's the game plan for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room. Every morning, 8 o'clock Eastern time. The markets are wild right now, but I'll tell you, come learn along, trade along with us every morning at the opening bell. It's so much easier when you watch me doing it right there with you. Once again, I'm going to put all the important links you'll need to learn the strategy, see all those trade examples I mentioned earlier. So start there first with the free video classes, learn the roadmap, start making money out there on your own, then come join me in my members trade room and we'll do it together. In the meantime, guys, be well out there, be nice to each other, be safe out the next couple days here, make some money for me tomorrow, and you better be here next time, will ya? Adios, amigos. Bye for now.